Now what we learn in this particular lecture is the basis of taxation of salaries. So basically, under the Income Tax Act, there are specific provisions as to what is taxable under the head income from salaries. What may happen is that according to your contract of employment, you may get salary in a particular year. Now let me explain this to you through an example. There are 2 or 3 things which one really needs to note, and then as I explain this section to you, it will become much more easier. The first thing is the term due. Second is paid, and third is arrears. Due. What happens is that in a employer-employee relationship, generally people work for a complete month. Let's say I worked during April 2011. Now the salary for this particular month may be due either on the last day of the month, which is April 30. Now unless and until there is any specific agreement between the parties which is explicitly pointing out that the agreement says that it is due on a particular date, salary is always taken to be due on the last day of the month. So for April 2011, the salary will be due on April 30, 2011. However, under the terms of my contract, the parties may agree that the salary for every month will be due on 1st of next month. So in this example, what will happen is the salary for April 2011 will be due on May 1, 2011. So the salary can be taken to be due on a different date and not necessarily the last day of the month under the terms of the contract between the parties. So this is what is meant by due. The rule is, unless there is something specific to the contrary, salary is due on the last day of the month in which the services are rendered. The second is paid. I think that is very simple and easy to understand. There is really no rocket science. Paid means when the check or cash is given to the employee. Now, as I said, it need not necessarily be that the due date is equal to the paid date. The salary might be due on April 30, but in many cases, normally what happens is it is paid on the 7th of the next month, which in this case will be 7th May. So the salary may be due on a particular date, but it will be paid on 7th May. That again is based on the terms of the contract. And the third thing is something called arrears. Now what do you mean by arrears? Suppose the company had employed say X for a salary of 10,000 rupees a month. X was getting this 10,000 say for 6 months. Okay. After that, the company realized that X is working very well, and or let's not say X, let's say the company realized that they have made supernormal profits during this year. So what they said was that for these 6 months also, what we will do is we will assume that your salary was not 10,000 but 12,000. And because this difference of 2,000 was not paid to you earlier, this multiplied by the period is something which we will pay you during the 7th month. So the salary of 7th month will be your increased salary, which is 12,000 plus the arrears. This amount, which is paid in respect of services performed in the past but paid at a later date, is called arrears. So there could be a date when the salary is due, there is a date when the salary is paid, and there could be certain arrears, which basically is nothing but an increased salary in respect of the past services which are paid after a particular time. Okay, so now let's basically go back to the law. So section 15 basically provides, section 15 is the charging section, which provides that the following income shall be chargeable to income tax under the head salaries. So when I compute my salaries, and please note that, rather not note, just be reminded that you would have seen under the concept basic concepts chapter that salary, or for that matter any income earned by an assessee during April 1 to March 31 is taxed in a particular assessment year. So when you go to section 15, what section 15 says is the following salaries, or rather the following income shall be chargeable to income tax under the head salaries. And now what does it includes? The first thing it includes is, let's see the first bullet, any salary. So the first thing is it has to be salary. Now what do you mean by salary is something which we will be discussing in the subsequent slide. Due from an employer. So if I am suppose working for an employer X, any salary which is due to me during April 1 to March 31 shall be chargeable to income tax under the head salaries. Or a former employer. Now suppose in one particular year I was working for 2 employers. Okay, let me show this to you. Suppose from April 1 to September 30th I worked for a company ABC. October 1 to March 31 I work for company XYZ. Now any salary which is due to me from ABC or XYZ during the previous year. I told you how you compute. So you see various due dates. See if it falls within April to March, and whatever is the number for ABC plus XYZ, say this is X, this is Y. X plus Y is going to be taxed in the income under the head income from salaries. So or rather it is going to be included under the head income from salaries. Whether paid or not. Now if it is due, it is to be taxed under the head income from salaries. Whether it is paid before March 31st of the previous year or not is something which you can see, and it is not relevant. So as the moment your salary is due, it triggers taxation in your hand. Payment may happen at a later point in time, but if it is due, it is taxed in your hand. Second is any salary paid or allowed to him in the previous year by or on behalf of an employer or a former employer, though not due. Now this will include basically your advance salary. Now what happens? Suppose in March I realize that I have some significant expenses to take care of. So I go to my employer and I tell him, sir, will you please pay me my salary for April and May, which is after March. Suppose we were taking the example of April 2012. Suppose we are looking at financial year April 2012 to March 31, 2012. Now 11/12 my salary is due up to March, but I go to my boss and tell him, sir, will you pay me the salary of April and May 2012 in advance? Now if that salary is paid to me irrespective of the fact that whether it is due or not, it is going to be taxed in my hand. So any salary paid or allowed to him in the previous year. So it has to be before March 31. If it is paid on April 1, 2012, then it goes on to the next year. But if it is paid in April before March 31, even though it is not due, because I haven't rendered the services, my contract says it has to be due on the 31st. Even if it is not due, it will be taxed in my hands. And third is any arrears of salary paid or allowed to the assessee in the previous year. So what we were discussing was that even if those arrears were relating to some earlier year, again suppose I am taking financial year 11-12 and the arrears I get are for 8, 9, 9, 10, 11, 12. Even then that is going to be charged as long as it is received by me during financial year 11-12. It will be included in my total income by or on behalf of an employer or a former employer, if not charged to income tax for any earlier previous year. So if these arrears were not charged to tax in any of the earlier previous year, they are going to be charged in my hands. Now everywhere in all these three clauses, what is important? The importance is that the sum has been paid by an employer, whether current or former. If as long as this amount is paid by the current or the former employer, and this is also by virtue of my employment, it should not be that suppose I was employed with company ABC, I left their job, after that for some time I became a consultant to them. I am not their employee, I am a consultant to them. Then if I am getting any income by virtue of that consultancy, it is not going to be taxed in my hands. It is by virtue of employment what you get is going to be taxed in your hands. The bullets which are there in mentioned below are basically something which we have discussed. Advance salary included in the total income of any person for any previous year shall not be included on due basis. Now this is just and fair. So if suppose salary of April and May 2012 was included in my income for previous year 10-11, sorry not 10-11, 11-12, then again when I compute my income for 12-13, I can't include that salary again. And this bonus commission part of a partner I have already discussed, so I am not repeating it. So basically when you compute your income under the head income from salaries, you have to include these three things. 1. What is due to you. 2. What is paid to you even if it is not due. And 3. If you get any arrears of salary which were not taxed earlier in your hands, then that is also included. This particular thing. You have to compute salary of X for previous year, 2011-12 on the following basis. Salary of X case 1 to 10,000 per month in both the cases. Okay. Due on last day of month, 7th of next month. Additionally, what you are told is salary during previous year 2010-11 was 8,000 per month. Okay, so answer 1, which means case 1. Now, what did I say? I said salary due during the particular year, whether paid or not is not relevant. So in case 1, during previous year 2011-12, the first salary which will be due for X is going to be 10,000 for April. This will comprise of what period? This will be basically April 11 to March 2012. So for April 2011, when will the salary be due? 30th April. So that is going to be 10,000. Similarly, for the next 10 months, there is no problem. I mean, normally the problem which comes in these cases is for April and March that you have to see. Now, when you reach March 2012, when is the salary due? 31st of March. So, and how do I tax my salary? I tax my salary on due basis. So the salary, total salary I have to pay tax on is 1,20,000. It is simple. It is due on the last day of the month. So this is as simple as it can get. Answer 2. When is the salary due? 7th of the next month. So the salary for April will be due when? It will be due in May. So I have to put in May. Then June. Again, July, August, September, October, November, December, January, February, March. Now for March, the salary will be due on April 7, 2012. Do I include this? No. Why? Because this is falling in previous year 2012-13. How many months are there? 1, 2, 3, 4, 5, 6, 7, 8, 9. So another 90,000 I add here. So is it? How much is this? 1,10,000. Is it okay? No, it is not okay. Why? Because just like the salary for April 11 is due in May 11, my salary for March will be due when? It will be due on the 7th of April. So I need to include the salary which I earned during March 2011 to this number. And what I have been told? I have been told that salary during the previous year 2010-11 was 8,000 per month. So I add 8,000 here. And this is going to be my salary for taxation in case number 2. So what I did in these two cases, I just found out what all is due during this particular period. April 11 to March 2012. Whatever was due, I included that. Where the salary is due on the last day of the month, obviously, it's very simple. But where it is due on the next, what I do is that for March 2012, my salary will be due only in April 2012, which does not fall in the previous year. However, my salary for March 2011 is going to be due in April 2011, and I will include that in my salary. So these are the things which you have to see. Now suppose in this particular case, the guy X would have got another salary. What? Arrears. Say there were arrears also which X got. How much? Say 50,000. So then this arrear would have been added. There is some relief which is available here, which we will discuss at later stage. But any arrears that X would have got would also be added here. Is it clear? Okay. You can watch this video as many number of times as you want. Just get some idea, because this is something which you are learning at a very basic stage. As you move on to your questions, things will become even more complicated.